Good morning, it's 7:44 a.m. Eastern Time, Wednesday, January 8th. This is the Orange Juice Portion Report, and this is Richard Boston. Okay, you're looking at a daily candlestick chart of orange juice. It's our rollover formula, so we did switch from the E-signal default. Doesn't matter, both of those type of charts are operating off the March for the moment. Okay, at any rate, what we want to show you is that orange juice is rallying, or should be rallying, in a large, major, intermediate, intra-year trend called L1. It's a cycle trend. So you have an L1 uptrend and an L1 downtrend. You combine the two, and you get an L1 cycle, bottom to bottom, top to top. And that cycle is about a semi-annual cycle. It's about how we do business on a semi-annual basis. It's supply and demand, the fundamentals, and the economics. So the point is, the demand side is the stronger, more aggressive here, creating this L1 up downtrend, and then eventually the demand will back away to create an L1 downtrend. Now inside the L1 cycles there are two or three, normally just two, cycles. That's a minor, intermediate, inter-year cycle. It's more like a quarterly cycle. It's how we do business on a quarterly basis in general. Okay, we're using a little bit of a simplification here. So we can see that we've had an L2 uptrend, and then we had an L2 downtrend, and now we're going to have an L2 uptrend. So these are legs, if you will, of the L1 uptrend. Up, correction, up. Okay, so demand put price higher, demand backed away, the price came down, because in our opinion supply is always present, so it's a little bit more about demand than supply, but both. And then we can see that it's time now for another leg higher. Demand should take prices higher. We do have a serious problem in Florida with the crop, with diseases over the last few years. We've had a little problem producing, and Florida is still one of the top producers in the world. And I'm not so sure Brazil's been doing all that well in recent years. We do have good global demand for orange juice. We're moving into the flu season now. And we've also had concerns over frost for Florida. And a little while ago, we even had concerns in California for weather-related problems. And we do have growing global and U.S. economies. Okay, at any rate, we can see on this chart that we have a 200-day average coming in here, and the market corrected to that, flirted around that. The 40-day average came up to it, and that's very important for commodities. Matched the 200-day to make a more important economic level, and for the moment, it looks like it was the demand level where they began buying again. 100-day average is down here a little bit below, and it's starting to pick up the pace. Now, the 5-day stochastic is used as a short-term indicator. It's an input to the model, along with many different studies. But we show it separately for something to watch for you. You can set it on your own charts, and you can take your intraday charts and do something to match the 5-day stochastic. 5-day stochastic, if it's turning at the time of a cyclical top or bottom and increases the odds, it's a correct signal that it will work. So it's kind of like a filter perspective. The model is a filter perspective for the stochastic, but the stochastic can give us additional input to the model as to whether the market's overbought, oversold, and ready for a signal. At any rate, you can see it's overbought here, and you can see the market has rallied into a short-term top. So now let's take a look at the short-term cycles. I'm tracing them out bottom to bottom. Short-term cycle is monthly, okay, to a little less than a month, bottom to bottom, top to top, creates uptrends, downtrends, lasting a couple of days to a couple of weeks. It's how we do business during the month. It's short-term business. So now let's expand upon this. And here's your L3 cycle, almost a perfect portrayal of it, upside down U, but they can be V and have other characteristics and lopsided. We can see that we were looking for a bottom here, all the way out to here for the L3. We can see we have a little smaller time zone for an L3 top, and we can see that I think we actually want to move this out a little bit further. Okay, we're using a couple of more days for this, okay? And what we're suggesting, it doesn't really have to go any higher than that. That coincides with this overbought condition, but it's also suggesting it can trade all the way up to 150. And it's suggesting the top is really due January 10th to January 21st, okay? Now, inside of a time zone, we'll draw a window of reversal. So this is the window of reversal. We think the top is actually going to be January 13th to January 15th inside this time zone. We have a right to expand this window reversal, contract it, move it around inside the time zone. The time zone can change price levels, but unlikely to change the earliest and latest. That's the primary focus, is time. Okay. Now, if price touches the window reversal, we'll lock it in place, and we try to leave it in place to remind us how accurate we were or otherwise. The label, however, is allowed to move in hindsight if we think we found a better top or bottom. The time zones are only used to make a forecast, and then they are moved out in the future to make the next forecast. This particular time zone was actually a little bit too large. We were allowing for a larger drop into this L2 bottom. I think the weather created this minimum downside objective. We think the L2 bottom is in place, but we're going to show you on a weekly chart that if we hadn't already moved this time zone out, this time zone would be down here to forecast the L2. And it is possible orange juice can take a hit in the next couple of weeks still, so we can be a little early on this. But we're already saying the bottom's in and the trend is up. It may not go much higher than it's already been, but I doubt it. It can easily trade up here to 160. Okay, so what we've got is a ratcheting process of these L3 cycles. Okay, within this L1 trend, it's how we do business. They're the short-term traders doing their business. They're buying, selling, buying, selling. But the point is they're going to be biased to the more important, larger cycle trend business. We've got a ratcheting process zigzagging up with an upward bias on into this L1 top. Okay, so I think anyone buying orange juice here, they can use some of these previous daily lows, weekly lows as their risk point, the place to have a stop. I think they can scalp a gain here for the L3. In a matter of a few days, you might be a little bit behind already, so it might be a little risky trade. But if we're right on this larger trend, I think you can probably set on it for a while and manage the risk and see if you can take a larger profit further down the road. Okay, let's go to the weekly chart. And you can see the L1 cycle breaking into two L2 cycles. You can see another L2 cycle. You can see the tops, L2 cycles, should trend higher. And then we see an L1 cycle, it should trend higher. And here we are looking sometime February to March, beginning of March. We're looking all the way up to 160. This is the time zone for a bottom, so unfortunately we have 2 more weeks that they could knock it down on us, but notice how they've taken out 2 weeks here, reversed around. They're challenging the high of 3 weeks ago. That's acting bullish. Notice the 5 week stochastics down here and starting to roll long, starting to trigger a buy signal. I think this trend is up and away into that L1 top. Now we're also long-term bullish orange juice for at least for a while for 2014, maybe for 2014. We could see 160 all the way to 2, believe it or not. I'm kind of targeting 170, 180 personally. So this could be very interesting how this develops for this year. So for the moment, we've triggered an L2 buy signal in orange juice. Manage your risk and give it a chance to rally into next month and see if you can take a gain for this L1 trend. Thank you.